Hello and a very warm welcome. Thanks for tuning into News 9 Live. Those words on the background behind us, you're fired. That's something that's being heard so commonly these days. We've all seen how the big tech firms, the top-notch names, Amazon, Microsoft, you name it, have been on a fighting spree at a time when huge amounts were being offered as salaries to novice industry workers. As part of a hiring boom, no one had thought that these numbers would increase and at such a speed. Today, we're seeing jobs being slashed for over 6 months in the big tech and the tech industries across the spectrum. The artificial intelligence has been responsible for disruption as well and has become a recession indicator for economic experts, the entire slashing of jobs as well. The bigger picture behind the tech layoffs, what is it? What kind of impact will it have? Unemployment and the current economic scenario globally, what does one have to say about that? And is downsizing the only solution for these big tech firms? And why are big tech firms on a firing spree? We're going to continue to probe these developments. I've got the man behind the documentary with us. We're also going to be joined in by an expert voice. But before that, for a nuanced, in-depth analysis of why are these big tech firms on a major firing spree after a hiring spree? We'll take a look at this snippet of the documentary. You can download the application News 9 Plus to watch the full version of it or scan the QR codes on your screens. But first, here's a snippet. We'll continue discussing it further.
I think the reality is that there was a huge hiring spree that happened globally.
You might reduce your electricity consumption, which will save you 1 or 2% or 0.1%. You might reduce a little office space, which will save you maybe 1 or 2%. But you reduce your staff, you save 10% overnight.
Economic reality did not force Google to lay off 12,000 of our coworkers.
Companies are trying to attract them with higher and higher salaries. And sometimes these things are also hype.
There was a surge and a frenzied hiring that happened, particularly starting from, let's say, end 2021.
They should have seen the writing on the wall many months back and conserved cash. So what should have been done maybe 1 or 2 quarters ago, they're doing right now.
Every morning you wake up, you read the headlines, they're shouting at you, 9,000 fired, 18,000 laid off, 50,000 gone. These are not the kind of numbers that one is used to seeing in papers every day.
You are fired.
When we entered 2023, we were looking at trouble at Twitter. Elon Musk had just taken over and more than half of the global workforce had been wiped out almost instantly. Little did we know at that time that the trouble at Twitter was a very different chapter. And there was a trouble of a different kind brewing in the big tech industry in the US. And that sort of led to what I refer to as the layoff pandemic. It wasn't restricted to one company. It wasn't restricted to a few employees. It happened in thousands. And when you talk about big tech, this is an industry that drives Silicon Valley, that drives a major chunk of the global economy. And you had the likes of Meta, which was earlier called Facebook. You had the likes of Amazon, Microsoft, Google's parent Alphabet, everybody literally laying off employees in thousands. It continued to make headlines every day. There was a ticker that we were maintaining in our newsrooms, and there were more zeros added to it every day as we progressed.
I think the reality is that there was a huge hiring spree that happened globally. So I think right now everybody's realizing that they need to do more with less. I think global tech companies, they are looking at the macro environment in terms of how tech is doing, and just doing, in some cases, pruning is not a bad thing.
As far as the Western companies, particularly in America, are concerned, this is a correction. If you look at the hiring they had over the last 2 years, that's enormous. They hired much more than they needed. The cost base went up. Now they're finding the revenues not growing at the same pace because many of them are getting saturated.
Well, that's part of the reason, because you focus so much just on the top line and it's growing. When that top line stops growing, then everybody starts worrying and people begin pulling out money. Or money is not, infusion is not as much as you thought. You're not even pulling out money. No investors may not pull out their money, but new investment that you expect is not coming. You suddenly realize, hey, I can't survive like this. And then you find that you've got to cut costs. And how do you cut costs? These are people companies. No? That's one of the things of this whole sector.
But even after layoff, the employee count in the tech industry is still at the same level at where it was before the pandemic started. So I don't see that as an area of big concern. The only thing that is concerning is that because the industry is maturing, we will not expect the same kind of growth we saw, say, last 3 years or last 5 years.
I don't think any of us could have foreseen what happened, that COVID coming and hitting us as badly. Ukraine, the war at Ukraine, I don't think that was something that you can factor in, right? The recent Silicon Valley Bank. So it isn't that companies don't, plan in these unforeseen, but the magnitude of these unforeseen is what is something that I don't think anyone could. If they could, I think every company would, why would somebody want to hire and then fire?
Well, so not just that, other cutting-edge documentaries on that platform as well. Do check it out as well. But Karthik Malhotra, my colleague with me in the studio here. Karthik, some really prime voices on that particular documentary as well. And You're Fired is something that we've been seeing, like you reiterated in the documentary as well. Across headlines, and the numbers and the zeros keep on adding. Right? Next to it. Is it safe to say at this point in time that one should be fearing a firing spree as soon as one witnesses a hiring spree as well? Are the two directly interconnected?
So, Kabir, when you invited me for this talk yesterday evening and you said 11:30 tomorrow you're fired, it sort of shook me up. Oh, okay, is that starting in India as well? And is that going to begin in the media sector as well? Thankfully, no. So we knew what we were discussing, and that's why we are here. See, we have to look at it in a larger context. What happened in the world? 2020, there was this massive tech revolution with the onset of the pandemic, and the kind of business transformation, technology transformation plans that companies had for the next 5 years, 8 years, 10 years got crunched to a matter of weeks and months. As a result of which, you had to quickly go and spruce up your workforce and get as many people on the job as possible and get them to churn out the new products and the new services which needed the world to function. You saw that with even Zoom, for example. Zoom became a default lexical, grammatically correct word which we all started using. Hey, let's connect over Zoom. You would never, in the pre-pandemic avatar, get onto a Zoom call. Only the big IT companies would use tools like Cisco WebEx or Zoom or MS Teams. But it became common knowledge that, Zoom is the way to go. Eventually what happened? Zoom had to cater to this mass infrastructure servicing of multiple accounts that were getting added, opened, new features that had to be demanded and had to be sort of serviced and respected over time. And you went on a massive hiring spree. And that happened across the board. Zoom is just one of the examples. And it's become so popular that even today on our shows, we are connecting guests on Zoom. Banik, who would be joining us now, would also be connected through a Zoom call. Eventually, the business slows down. There are larger macroeconomic concerns which are looming, arising from the fact that, there is a Russia-Ukraine war. We've seen oil prices rise. We've seen talks of US heading into recession, starting maybe, as early as September, October last year, going on even today, though thankfully, the recession is yet to hit, and US has, despite the banking crisis, despite the IT layoffs, etc., US has still not technically gone into recession. But what really happens is, with all these pressures, the Fed Reserve starts to increase rates. Now, when you increase rates, what do venture capitalists do? What do private equity firms do? They don't want to take a risk or punt their investments in startups or in new age technologies, which may or may not yield dividends 5 years from now. They opt for a safer option. Put the money in the US Fed. Put it in the treasury, put it in the bond market. It's going to give you assured returns. Why invest capital in a business that may or may not have a future given the recessionary environment we are in? As a result of which, the mass hiring that happened for the tech companies, the big tech especially, it starts to make a dent on the P&L. Now, you don't really have access to the funding that you had earlier. There's a funding winter. There's a crunch in the easy money that was rolling in earlier. And you want to go to the banks and you want to pick up some money from there, from your deposits, which eventually led to the Silicon Valley Bank crisis and the banking collapse as well. But primarily what happens is, you don't have the money in your P&L to support the kind of salaries.
For the benefit of the viewers here, Karthik, Can you help them understand what is P&L and the inflation that one has to be wary about, and how can companies tackle it as well?
Okay, so P&L is typically, it's the operating statement of any company. It is your expenditures and your income. You capture every single element which is a cost for you, and you capture every single element which becomes a revenue stream for you as well. So it is basically a delta. With that, a positive delta. More income, lesser outgoing cost is profit. More outgoing cost, lesser income coming is a loss.
Like a simplified tally sheet for the company.
It's a tally sheet. It's an Excel sheet. It's an Excel sheet.
All right. Barnik Chitran Maitra, Managing Partner and CEO of Arthur D. Little in India and South Asia. Many thanks for joining with us. We're trying to decode the firing spree that we're seeing, not just in India, but at a global level as well. According to the documentary that is particularly in question right now, it says that this is essentially cost correction, Barnik. How long will the companies, sell off their tables or their infrastructure? You let go of your employee, and overnight you save up about a huge percentage of that.
10%. 10% is a number.
Is this cost correction the only way, downsizing the only way for these big tech firms? Because, I mean, you're essentially trampling on an employee's dream also suddenly. A final notice suddenly comes up on your table as well. Is there a way for the employee to hold the company accountable? And looking at it from the company's point of view, is downsizing the only option and the only viable option left?
Yeah, so I think you have to get to the root cause of what's driving the downsizing, right? It's a lot of the forward-looking viewpoints which have been mentioned, but fundamentally what also happened during the pandemic is that a lot of companies overhired in anticipation of demand continuing to grow at the same pace which they saw at pandemic, right? So there was not only hiring for current demand of services, which was in 2020, 2021, but people anticipated, I think wrongly so, as they are now pointing out, that demand for digital services will continue to grow at the same exponential level which they saw in 2020, 21. And as a result, they overhired, right? So what is happening now is a correction back to sane business practices and norms. And to be fair, if you look at a tech company, there is no other cost to really downsize. I think typically knowing these tech companies, they would have cut marketing budgets, ad budgets, discretionary budgets first, and then got to people. But again, I think there was an extreme overhiring in the pandemic era, which needs to be corrected. And as per my count, I know people are taking account, anywhere between 300 to 500,000 jobs have got slashed, right? Maybe a few more to follow, given the fact that the macroeconomic outlook, particularly for North America, is not very positive. So again, this is a fact of doing business. I think it's a little unfortunate for employees, particularly for people who are getting their first time, second time jobs, people who are visa holders in the US who often need to leave after their job gets taken away from them. It's unfortunate for them. But it's again a bit unlikely that anything can be done to hold employers accountable. I think in general, if you look at all the big companies, one of the fascinating stories I keep following is that the only tech company which has not announced any layoffs is Apple, which is again quite in sync with their business results. So again, if you're an employee today who has an option of careers to choose from, I think you should take note of what's going on right now to decide which employer would be most suitable for you in the long term.
Well, Karthik and I were just discussing, Apple's come up with an announcement of slashing jobs over there as well.
I think just 2 days, 3 days back, Apple has also, it hasn't come out with a number really, but it is one of the last chips to have fallen, and yeah, there it is. So Apple has also, in fact, announced job cuts, and of course at a time when it is launching new stores in India, 18th April in Mumbai, 20th April, and in fact Tim Cook is likely to be in India as well for these two launches. But yeah, Apple has also pretty much bitten the bullet, so to speak.
A bite of that apple, per se, the forbidden apple, the forbidden apple.
Yeah, but the numbers will be a little smaller than
the numbers
other
I
tech companies, because Apple didn't overhire. Yeah? They didn't overhire during the tech boom. And remember, Apple is a hardware-based company, right?
That's
so
right.
It's not that they were seeing a lot of boom of use of services. So again, what Apple will be doing is be more in anticipation of a softer macroeconomic outlook over the next 2 or 3 years. I don't think their layoffs have much to do with overhiring, which happened with a lot of the other tech companies. So again, drivers for Apple are slightly different, right? Which I think Apple's response to the crisis is far more sensible. They never overhired, and if they're going to be trimming some operations, it will be mostly in anticipation of lower demand, which we've already seen in iPhone sales, by the way. The iPhone 14 sales have been reasonably muted across the board. So again, that's business as usual, right? That's not
But Mr.
something
Chitran
dramatic,
Maitra,
not as dramatic as
Mr.
tech
Maitra,
layoffs
Mr.
before.
Maitra, we can see the scales of balance working out here. A hiring spree and now a firing spree. But give us a sense of how you're reading into the future and the growth of the big tech and the tech industry at large.
So the future, I think if you look at the short term and the medium term, the future is reasonably complicated, right? I think it's not as optimistic as people point out to be. I think the Ukraine war was the first set of, I would say, uncertainty. But I think what you're seeing with the banking crisis as well as the macroeconomic outlook in the US is also a big concern. So I think in the short term, I think tech companies across the board are going to give reasonably muted guidance on revenue and profitability growth. I think the hiring plans are mostly on freeze for the next few quarters. And I don't see a return to the hiring levels for the next 4 to 6 quarters at least. So I think it's a little bit of cautious optimism. Amongst the tech companies, also different companies are grappling with different challenges. So again, we should not be painting the full industry with one big stroke. I think Microsoft is different. They are seeing success with their OpenAI platform. Google is struggling to catch up. They have their own struggles. Their search revenues are at threat if Bing's integration with OpenAI takes off and ChatGPT takes off. You have Facebook, whose metaverse investments have not paid off at all. In fact, there are rumors that they may actually be completely dropping their play into metaverse. So different tech companies are grappling with different challenges. And as a whole, the full industry is facing severe headwinds, which are expected to continue for the next few quarters at least.
All right. So certainly things not looking very bright for these tech industries, at least for the next couple of quarters as well. But, Karthik, as part of the documentary as well, a really fascinating point that did come out was about how a fresh graduate got hired for, let's say, $250,000. How does that happen? That is so mind-boggling. I mean, I would clearly call out the employer crazy, and you're bound to be looking at the balance, these scales of balance of working out.
Yeah. Sure. I mean, it's easy to point a finger at US big tech sort of, overpaying employees with not much experience. Unfortunately, that is also the reality in India. Now, you go to an IIT and you pick up a grad who comes from a computer science IT stream. You end up paying that lad a lot more than a counterpart, let's say, in mechanical engineering, or a counterpart in civil engineering, or any other field which is not related to IT, simply because the IT companies were flush with funds. They wanted to work on new technologies. It's a highly competitive environment. You want to outdo the other guy. We are seeing that battle play out, like Barnik also mentioned, in the AI space right now. There's a bid. You want to outdo the other guy. You want to go on a rampage, release something, advertise it, market it, make multiple people, millions of people download it and use it and get hooked onto a platform and eventually make money off that platform. So the speed of innovation in the IT space is much higher, and that requires new ideas. That requires, and of course, and then there is cross-pollination. You have these guys coming at a very high first salary, spending 2 years, 3 years in a company, taking 100%, 200% raise and jumping over to competition. Of course, competition laws are much stricter in the US as compared to India, but that's the reality. So product guys, technical guys, technology guys are hired at a massive salary. In fact, the Twitter P&L, we had done a story on News9 Plus on Twitter as well. When we looked at the Twitter P&L, we really wanted to understand. Elon Musk took over 27th October. November onwards, we start firing people, right? 50% of the workforce slashed pretty much almost overnight. So we actually dug deep into the P&L of Twitter and we saw what is happening here. Why is this urgent need to slash people, saying that this is going to make the platform profitable? And Elon Musk, for whatever said and done, was right in his calculation, because the bulk of the cost in the Twitter P&L was research and development. Now, these research and development centers, unlike, let's say, a DuPont of the world or an traditional engineering companies, these are not laboratories with huge equipment. These are people who are investing their time, their mind power, their experience into building new products. So this R&D cost, which formed a bulk of Twitter's P&L, the cost side of the P&L, was actually people. You lay off 50% of that and yeah, you're profitable.
All right. Barnik, would you like to echo on what Karthik here is saying? And also, Karthik mentioned what artificial intelligence has done for the and to the industry as well. A lot of disruption. What do you think? The artificial intelligence and the big techs will go hand in hand vis-a-vis employment and labor force?
Yeah, let me talk about artificial intelligence, right? I think first, artificial intelligence will create a new category of jobs, right, which will be relevant for tech players. People who are well trained on new artificial intelligence techniques like large language models, natural language processing will command premium in the market. And I would disagree. No one is overpaid, right? You are paid what the employer or the company attributes your value as, right? So you will see a lot of value attribute to that. Now, the flip side of AI is that a lot of jobs which are mid-end, low-end jobs will also get automated with use of tools like ChatGPT. So I think there is a flip side. If you look at a lot of traditional IT businesses like application maintenance, ticket maintenance, responding to customer support, all of that also gets automated. So there will be a huge chunk of jobs, right, in the tech sector, maybe 15 to 20% of the minimum, which are likely to disappear as AI takes over. They will now get morphed into new, far more expensive jobs in the AI space, right? So that's going to happen. I think this is also reflected in Twitter, right? What happened in a lot of tech companies is that they got bloated. For the earth of me, I didn't know why you needed several thousand people to run a platform like Twitter, which at the end of the day is an online automated marketplace. So in a way, the entire cuts which have happened across the board make tech companies more leaner and meaner and more efficient. Remember, the entire philosophy of tech is supposed to be more efficient to run technology companies than asset companies. So again, some of the changes and some of the layoffs will make these companies far more resilient and future-proof than they were before, when they overhired and had bloated people headcount which are not needed. As has been pointed out, Twitter is running fine with nearly 1/6 or 1/5 the headcount they had before.
Right. Barney Chitran Mehta, Managing Partner and CEO at Arthur D. Little for India and South Asia. Many thanks for joining with us and helping us out with your insightful inputs. Karthik, before I let you go, very quickly, this is a sort of an indicator for recession as well. Have we seen the bottom of it really quickly?
This is not really an indicator of recession, but this is happening forecasting a recession.
Okay.
More layoffs may not necessarily lead to a recession, but layoffs have happened with a forecast of a looming recession.
All right. And like you pointed out, we can see Elon Musk smiling in retrospect for sure. And we can all let that sink in. Well, that's all the time we have for you in this episode. Do check out the News 9 Plus application and the documentary, You're Fired. Thanks for watching. Content continues on News 9 Live. Don't go anywhere.